Today we discuss the latest financial report of Nvidia, the technology company that currently holds the #1 position in the world in terms of capitalization and is also considered the heart of the global artificial intelligence wave. Nvidia continued to deliver impressive numbers in the second quarter of fiscal 2026. Earnings per share came in at about $1.05, beating Wall Street's average forecast. Revenue also beat expectations, coming in at nearly $46.7 billion, up more than 56% year over year, a number that underscores explosive growth. The most notable was the data center segment, which is considered the main driving force, thanks to the demand for AI chips. Revenue from this segment reached $41.1 billion United States dollars, setting a new record. However, this result was still slightly lower than the very high expectations of analysts, causing the market to react cautiously. So despite the report beating the consensus forecast, Nvidia shares fell about 3% in after-hours trading, a testament to the huge expectations for Nvidia. If even one area falls short, investors react strongly. Another notable point is that Nvidia announced a $60 billion share buyback program, a strong signal that management believes in the long-term value of the business and wants to increase shareholder value. Looking ahead, Nvidia forecast third quarter revenue of around $54 billion, plus or minus 2%, slightly above Wall Street estimates, suggesting the company remains confident that demand will remain very high. However, one risk that cannot be ignored is the Chinese market regulations. Restricting chip exports from the U.S. to China are clearly affecting the distribution of the H20 product line in the new generation of Blackwell chips. However, one risk that cannot be ignored is the Chinese market regulations restricting chip exports from the U.S. to China are clearly affecting the distribution of the H20 product line in the new generation of Blackwell chips. This is a factor that many analysts maintain a cautious view, although they still appreciate the long-term potential. Major financial institutions have also reacted differently. Some banks have raised their price targets on the stock, while others have kept their ratings neutral due to geopolitical concerns. That said, Nvidia remains an attractive name, but it also has many variables. In short, Nvidia continues to demonstrate its superior strength in the field of AI, but the market has set expectations extremely high. Investors need to consider carefully if you believe in the global trend of artificial intelligence. Nvidia is still the giant leading, but if you are concerned about political risks and the valuation is too high, then this is the time to be cautious.